Banking giant HSBC has reported a sharp rise in profit for the final 3 months of last year. The bank is paying its biggest dividend in 4 years and pledged quarterly payments this year. Rising global interest rates gave HSBC an earnings boost. Its pre-tax profit in the fourth quarter of last year was $5.2 billion, a 92% surge from $2.7 billion in the same quarter in 2021, and above market estimates. Despite the sterling performance between October and December, full-year profit for 2022 came in at $17.5 billion, down 7% from $18.9 billion in the previous year. The London-based lender, which generates most of its revenue in Asia, will pay a final dividend of 23 US cents per share, bringing its dividend payment for the full year to 32 US cents per share, the biggest in 4 years. The bank also intends to pay a special dividend of 21 US cents per share from the potential sale of its Canada business. HSBC said its annual expected credit losses rose to $3.6 billion due to the increased economic uncertainty and the real estate market downturn in China. Chief Executive Noel Coyne, however, noted support from China's property policies.
The provision of more liquidity by the Chinese banks and the Chinese government, the relaxation of some of the regulatory constraints that were on the sector, plus some of that extra liquidity has been made available for the offshore debt as well. The sentiment has improved in Q1 in January relative to where we were in Q4. I think there's still a lot of work to do on commercial real estate in China.
HSBC will resume quarterly dividend payments this year and consider new share buybacks in the first quarter. The bank said because of higher global interest rates, it expects net interest income of at least $36 billion this year. But it kept its target of at least a 12% return on tangible equity this year. The failure to raise the target dismayed investors, and the lender lost 2% on the Hong Kong stock market.